Hey everyone, welcome back. Something big just happened in the Fed rate cut market. In the last 24 hours, the probability of a cut at the next FOMC meeting dropped 14 percentage points, from around 56% down to 42. That is a serious single-day move. Here is what drove it. 3 headlines all landed at the same time. First, inflation came in at 3.4%. Analysts expected 3.1. That upside miss is exactly what makes the Fed nervous about cutting too soon. Second, Powell struck a hawkish tone in a preview speech. Not full alarm bells, but noticeably more cautious than the market wanted to hear. Third, 2 actual FOMC voters publicly pushed back on near-term easing. When people with actual votes say that on the record, markets listen. All 3 signals landed together, and traders repriced immediately. That is your cause right there. Let's talk about what the probability shift actually means. Moving from 56 to 42% means the market went from lean yes, slight favorite, to actually probably not. And this is not a thin market. $3.15 million in liquidity sits behind this price, which means it is a real, well-supported forecast. The $1.8 million in 24-hour volume confirms traders were actively repositioning, not just watching the number move. The bottom line, the bar to cut rates just got meaningfully higher in the eyes of the market. Here is where it gets interesting. Our smart money flow signal is pointing sell on this contract. That means the larger, more sophisticated traders were moving out of yes contracts before the full move hit the mainstream feed. Informed traders tend to move first, and the probability follows. When the flow signal and the probability direction line up like this, the move tends to be more durable than a random swing. The smart money is not coming back in yet, and that matters a lot. For context, we have seen inflation surprises shake rate cut forecasts before. In 2023, similar upside CPI prints caused 10 to 15-point probability swings, and several of those kept going lower as subsequent data confirmed the trend. A 42% probability sitting with a sell signal has historically drifted further toward 30 unless the incoming data changes the picture. And it is not just this contract. Related markets for later 2024 FOMC meetings are also repricing lower. The whole curve is moving, not just one isolated contract. So what to watch? Number 1, the next CPI print. That is the data point that either confirms this move or reverses it completely. Number 2, Fed speakers in the coming days. More hawkish comments push probability lower. A dovish surprise could bounce it back fast. Number 3, watch the liquidity depth in this market for early signs of fading conviction. If you want to catch the next big probability shift the moment it happens, hit subscribe and we will see you in the next one.